Hello guys, I welcome you to another part of this masterclass. In this part, we'll be looking at what is imbalance and what is inefficiency. Imbalance and inefficiency are the same thing. So imbalance simply means the lack of balance between buyers and sellers in the markets. That means there is too many buyers in the market at that particular moment, so imbalance is going to happen. You know, normally when a candle is moving this way, when you have a candle like this, the next candle is going to open from the close of this candle. You are going to see something like this. From the close of this candle, so the next candle is going to open from the close of the last candle. So this is how imbalance happen. This is how it occur. Listen guys, this third candle, if there is imbalance, it is not going to retrace back to the initial candle here. It is going to continue from here and it will keep moving downward without doing what? Without retesting this this first candle is not going to retest it. So the gap between this first and the third candle is what we call imbalance. So that means there are more sellers in the market than the buyers. So had been there's balance between the sellers and buyers, the buyers are going to push the market up to balance this order before continuing downward. So it will probably form a wick like this to retest this first candle. This is not an imbalance because the buyers has pushed the market to retest the first candle. Note, for you to mark out an imbalance, you need the first three candles. So if the third candle pushes up to retest the first candle, then that is not an imbalance. But if there is gap between the first and the third candle, then a balance is present. So as you can see, this gap here now is the imbalance. That means there is more pressure from the seller side in the market. So also for the this is for the bearish market. The same thing for the bullish market. Note, for you to mark out an imbalance, you need three candle. So if the third candle retested the first candle, then no imbalance. But if there is gap between the first and the third candle, then the imbalance is present. So guys, let's go to the chart to show you examples of imbalance. Now, let's take this, let's look at this this side for imbalance. Okay, I told you guys you need the first and the third candle. Look at this candle. This is the first candle, this is the second candle, and this is the third candle. Now, look at this now. This is the close of the first candle down to the third candle. As you can see now, there is imbalance here. There's imbalance here. Now look at this again. There's another imbalance here. The imbalance can be small and it can be large. From this candle 1, 2, 3. As you can see here, there's another imbalance here. Okay. Look at this again. There's another small imbalance here because the third candle does not retest the first candle. Now look at this now, 1, 2, 3. You can see this third candle, the last candle now, it retested the first candle here. So the balance is not present here. Now look at this again. Let's look at this cell. There's imbalance here. Another one here. Another one here. So this is to show you that there is a lot of selling pressure in the market, leaving gaps between the buyers and the sellers. You see a lot of imbalance. Let's mark out some other examples. Let's look at this, for example, now, so that we are going to understand better. Look at the first candle, second candle, which is the bearish, and the third, which is the bullish. You can see there is not imbalance here. Because from the first, second, and third, the third candle retested the first candle. So there is no imbalance. Look at this one. There's no imbalance here. All these candles are filled up, no imbalance, except here. So there's imbalance here. There's imbalance here. There's also small one here. Does not matter, either small or big. So that is how to mark out imbalance. Now let's go to the bullish market. It's also the same thing. Let's try to mark out the bullish imbalance. First candle, second candle, third candle. As you can see, there's no imbalance here. Why? Because the third candle retested the first candle already. So no imbalance, but from here, 1, 2, 3. You can see imbalance here. There's another one here. There's no imbalance here. There's no gap between this 1, 2, 3. There's no gap. Okay. Initially there was gap, but later this candle came down to fill it. So no more imbalance here. There's imbalance here, but the price later came back to fill the imbalance. Now look at here, another imbalance. So with time, you should be able to spot this without even wasting your time. Note guys, I'm only trying to let you understand what we mean by imbalance. I'm not explaining yet how to use them, but you need to know how to spot imbalance first. So looking at this, there's imbalance here. So guys, that is how to spot imbalance. It is everywhere in the market. That is just to tell you there is buying pressure or there is selling pressure. So guys, let's go to the second topic, which is the order block. The order block. So what is order block? So guys, order block simply represent the high volume of orders from big trading institutions such as central bank, the smart money, the big banks. They are the one that cause order block. And how do we mark out an order block in the market? That is why I explained to you first what we mean by imbalance before order block. For every imbalance in the market, there is going to be an order block. Order block is, you can mark out order block using the last candle before the buying prayer or the last candle before the selling prayer. So for example, guys, in a bullish market, when you have something like this, before every bullish move, there's going to be an order block located below the move. So your order block can be at this point. So whenever price retested the order block, if it's a valid order block, you are going to see another push to the upside. So how do you mark out your order block, guys? Let me show you in the charts how to mark out your order block. This is the last candle before the buying prayer, as you can see. So you can mark out your order block using the last candle before the buying prayer. But this order block is not valid. Why? For you to have a valid order block, these things must be present. Firstly, imbalance must be present. Secondly, it must break structure. And thirdly, it has to take out liquidity. I haven't explained to you guys what we mean by liquidity. But in our next video, I'm going to explain what we mean by liquidity. But for now, we are going to mark out the order block. This is the last candle before the buying prayer. Mark out the last candle. Some do mark in a bullish market, some traders do mark only the last selling candle, but that doesn't matter. Why I said the last candle is that it is not common for you to mark out the last candle, and the last candle is not going to take out the liquidity. I will explain to you better in our next video what we mean by liquidity, but for now we are still on order block. Just know you are marking the last candle and imbalance should be present. Here imbalance is not present. Why? Look at this candle. The first candle, second candle, third candle. So there's no imbalance here, so you cannot mark this candle. Which candle do you mark instead? You move to the next candle. This is the next candle. 1, 2, 3. This has been retested already. This candle retested the first candle, so you move to the next candle again. This is the next candle. And look at again from the next candle 1, 2, 3. So this candle is our valid order block. This is our valid order block, but if you want to be safe, you move your zone to touch the last candle, then you'll be safe. This is the last candle here. This is a very valid order block. There is imbalance also. Look at, count it from the first candle, first, second, third. As you can see, the third candle is not touching the first candle. There is a little imbalance, so this is a valid order block. We're looking at this, guys. It broke structure here. This is the last candle. But if you are looking at this, guys, this has been retested by this, so you have to shift your order block to the future and make it an unmitigated order block. What I mean by mitigated is when the price came to touch the order block, then it is already mitigated. This order block is already mitigated here, so if you want to shift it to the future, make use of the unmitigated order block. This side now, it has not been mitigated. So which order block do you mark out here? The last candle. This is the last candle. But is imbalance present? 1, 2, 3. No. This candle already covered up the imbalance. So you move to the next candle. So this is the last candle here. This is the last candle. Is imbalance present? Count it. 1, 2, 3. No, because this order block now is mitigated already by this candle. So you move to the next candle. It is already mitigated by this candle. Now you move to the next candle, and this is the next candle. So this is going to be your order block. As you can see, then the price came here to retest it and keep going downward. Don't be confused, guys. What I mean by mitigated and non-mitigated. Your order block must have an imbalance for it to be valid, or else the price, some people will mark this side as an order block and the price will not come back to retest it. You just see the price reversing before getting to your order block. Why? Because your order block is already mitigated. So you move to the next candle till you find a candle that is not mitigated. As you can see, there's imbalance here. So this candle is not mitigated here. That is why this order block is a valid order block. Let's move to the let's let me try to show you more examples. First thing you need to note, your order block must break structure. So this is a break of structure here. And where is the last candle after the before the break of structure? This is the last candle before the break of structure. So you mark out the last candle. So that's your valid. This candle has been mitigated. You move to the next candle. As you can see, imbalance is present here. 1, 2, 3. There's little imbalance between this candle. This big candle has been mitigated already. So you shift to the next candle. This is the next candle and imbalance is present there. So this makes it a valid order block. Okay, look at this. This is another example. This is a break of structure. And where is the last candle before the break of structure? This is the last candle. Is there imbalance? Is there a balance there? The candle is not mitigated yet. Look at it. There is a little gap there, so it is unmitigated. Now you can make it a valid, you can mark it out. That's a valid order block. Let's try to mark out the order block here. You can see a change of character here. This is a break of structure, then a change of character. Then where's the other block here? Where's the last candle? This is the last candle, but it is mitigated already. 1, 2, 3. This candle mitigated it, but this is the last candle which is unmitigated. So your other block should be at this side. But if you want to be safe, you mark it out to touch the last candle. But there's a little trick here. The marking does not touch your other block before moving impulsively. Okay, looking at this, looking at this, this is a break of structure here. So where's the last candle? This is the last candle here. Everything is mitigated except this. Even this red one is mitigated. It's mitigated by this. So this candle is a valid order block. You can extend it to the last candle. Why? Because there's imbalance here. There's imbalance here. So this make it a valid order block. Remember, I told you guys you need three confirmation to mark out a valid order block. First, you need a break of structure. Second, imbalance. Then the third one, it must take out liquidity. Even if you are marking out the last candle, that means it already takes out the liquidity. But I'm still going to explain to you guys what we mean by liquidity. But if you are sure of marking out the last candle before the move, before the break of structure, the last candle before the break of structure, then you check out for imbalance before marking out your order block. Let me give you guys more examples. This is a break of structure here. Also, let me explain to you guys how to confirm a valid break of structure. Looking at this spot now, guys, this is not a valid break of structure. You'll be surprised why? Because it breaks this with a wick, and the wick is also covered with another wick. It breaks it with a wick. Before you can confirm a valid break of structure, then it must break it with a full body of candle. The body of candle must break the low or the high before you can confirm it a valid break of structure. But this breaks it with a wick. Now, for you to confirm a valid break of structure here, then this wick must be broken with a full body of candle. But looking at this now, it is not breaking. Yeah, this candle does not break it with a full body. All these are still wicks. So this is not a valid break of structure here. You can only confirm this break of structure at this point where we have full body of candles breaking the structure. So this spot now, it is not a valid break of structure because it is full of wicks, 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 wicks. But here is a valid break of structure because this wick was broken with a full body of candle. Now you can confirm it a valid break of structure. Also, this is a valid break of structure. Where is the last candle before the break of structure? Here is the last candle. So you mark it out. You see what I'm saying? If you are marking out the last candle alone and it is already mitigated, what do you see? The price might not get to the order block before moving. Why? Because it is already mitigated. So you move to the next candle that has imbalance. Looking at this now, where is the candle that has imbalance? This is the last candle. So you move to the next candle. So as you can see now, you're having this as the next candle, which created imbalance. So this is your valid order block. To be safe, you can mark it out, extend it to the last candle. Okay guys, let me give you another example. Taking this as another example, this is a break of structure. As I told you guys earlier, at this point, this is not a valid break of structure. Why? Because it only breaks it with a wick and not the full body of a candle. But the break of structure occur here. Here you can see a full break of structure. Why? Because it was broken with a full candle. Now you can confirm this as a break of structure. So where is the last candle before the break of structure? This is the last candle here, but you cannot mark out this is the last candle, but it is not valid. Why? Because there is no imbalance. It was retested by the third candle. 1, 2, 3. So you move to the next candle. Is there imbalance? Yes, there is imbalance. There's imbalance here. So this makes this candle a valid order block. You can extend it to be safe. And what happened? It retested it and it keeps falling. So guys, with practice and backtesting, you are going to get all this better. So in our next class, I'm going to explain to you how liquidity works and how you can use liquidity to your advantage. So see you in our next class, guys. Have a nice day. Thanks.